think the overall story is we got very good payroll numbers. I think the outlook is that real rates going to go less negative, and that means headwind for gold. I think we're going to see a little bit more outflows. I wouldn't be surprised if we see another, at some point, 20 million ounces leaving the ETF and futures market, and that means more downside. That's where, on our perspective, we tell people to hedge your position tactically, or at least sell the upside, get some yield, because we're looking at the 1,600. So more downside is in store for the yellow metal and probably for the entire sector.
Right. If that's the case, then where do you see prices for gold ranging over the course of the next 4 months, closing out the year 2021?
Well, the 1,600 I gave you is really more a story for 2022. Maybe in the short term, we start to stabilize the 1,695, some technical levels thereabout. But I think the risk is that we, march much quicker towards the 1,600 levels, simply out of the fact is when the Fed starts to taper, I think there's still this element where the dollar potentially could be a little bit more stronger than we initially thought, although we're looking more on a sideways trajectory towards the year end and dollar strength in 2022. So I think if you would ask me to that message, 1,695, the risks are to the downside for the yellow metal. And for example, silver, I would think about the price could very quickly again head towards $22 an ounce.
I don't want to make this a commodities discussion, but I'm just quite compelled to ask you about what's happening in that universe. Oil is going down, and of course, we're looking at the sharp fall in iron ore futures as well, 4-month lows. What do you make of it?
Well, we had a little bit of an element of risk off. You might say, well, that's not fully true. You look at equity markets, the US, for example, all-time high. But if you look at within the equities, we had the reflation trade was challenged at some point, or still is. I mean, you have seen some of the materials under pressure, energy equity, but also the financials. So that element of risk off, which has been here due to the COVID situation and also the Delta variant, we think the market will look through that. The growth is going to be extremely solid second half of the year, looking at 7 to 8% global GDP growth. And I think with that notion, we want to have that risk on posture. And I think the market will come back to that element. And I think that supports commodity overall. I think some of the concern in terms of Delta variant and I would say a decline in mobility here in Asia, for example, is overdone. Maybe it costs us 0.1 million barrels per day in terms of China, but still looking at China trajectory in terms of demand towards 15.5 to 60 million barrels per day. So with that outlook, we want to be bullish on commodities overall, particularly oil looking at 75. So I think investors shouldn't get all too negative, with the exception of gold and the precious metal market, where I think more downside is in store.